I think you can take a snapshot in time, maybe a 1 or 2 year period, looking at some standard moving average levels and see if the stock actually reflects that it relies on those. You know, if you find
Welcome back, traders and investors. We have Sean Udall on the line of the Tech Stock Strategist, who's been on a couple different occasions on the show and has made some pretty good calls on the bullish side. Sean, how you doing this morning?
I'm doing fine, very well. How are you guys?
We're doing good. We're doing good. I think we're all, just trying to digest the news from overnight on, the Ebola scare and other things that are going on in the market. But we have you on to talk about tech stocks, and you mentioned some potential bubbles that you were monitoring. Would you like to go into more detail on those potential bubbles?
Sure. Well. So don't misinterpret this. So my backdrop, and I've actually been writing about this for at least a year, probably a year and a half. I probably first penned a piece about this back as early as like 2010. But I actually think so. A lot of people talk about bubbles when they talk about them negatively. What I'm talking about is, and I've been writing pieces called my 1998 thesis. So I guess what I see that could potentially set up is a mini bubble. Now, bubbles generally are bad because they end very badly, but on the way up, they're very good if you can play them correctly. So I actually think the odds are increasing for what I would call an upside overshoot, or some sort of upside black swan, or some sort of mini bubble. And I kind of go on there to bring that up this morning because it seems like everybody keeps talking about correction, crash, blah, 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 blah. Well, maybe we'll definitely have corrections in the future. We typically have 2 a year. And we'll probably crash again at some point, or we will crash again at some point, but who knows how far away that will be. But if you look at a lot of things are lining up for sort of a powder keg move to the upside, and that's something I'm basically watching for. But the whole formation of the thesis is pretty simple, and that the Fed has been far, far too low for far, far too long. And that's basically created a ton of stimulus in the system that most people don't really realize that we have. So then, it's about navigating, okay, so what's the good part of the bubble? What can I play? And what's the dangerous part? Everybody has to decide how to do that on their own. And then if you want to talk about some individual bubbles, we had sort of a mini bubble that broke this spring in parts of technology. I call it the high beta tech part. And I would say a stock like GoPro right now is sort of exhibiting more potentially dangerous signs of, that's one stock, if you're trading it long, you probably have to be careful. But so when I talk about bubbles and in my writing, really what I'm talking about is the potential for at least a mini bubble in front of us. So basically don't get overly concerned about a crash when in fact we might just have the opposite coming.
Okay, so let's go into some individual stocks here. What do you look at if this market does launch to the north? What are you looking at? Facebook just seems to be on a tear here, just rallying, made a new all-time high yesterday. Give us your outlook for Facebook.
Sure. So I recently, in fact, I switched back. I'd been neutral to bearish on Facebook, and I still favored Twitter over Facebook, and I favored Twitter over Facebook quite a bit. So I just think Twitter has a lot more upside. I think they're a lot more dynamic, and I think Twitter's going to hurt Facebook over time. But I basically swung back and said, I really don't see any way now that Facebook's not going to make a run to somewhere between 95 and 110, and probably more likely 100 to 110. And there's a lot of the work I do, a lot of the numbers look really good. A lot of the ad potential looks really good. The quarter's setting up strongly. So the bottom line is, things look really good for Facebook and great for Twitter. And basically the one thing they're seeing is ad rates are actually increasing, not decreasing. And historically in the internet space it's always been a game of, if you have a property, you need to constantly get more and more ad impressions and more views and more clicks, because ad prices generally drop over time. That's, for example, what Google's experienced, especially when Google transferred into more of a mobile framework. But what's interesting about Facebook and Twitter is their ad rates are actually rising, and that has just started happening recently. So the setup for Facebook and Twitter, I think, are really good for the next 2 quarters.
Okay, and just technical levels here for Facebook. Could you just please reiterate those targets? They were quite a ways up there.
Well, yeah, let's just say 15 to 20 points higher. But this is one of those things where the technical level now, you basically got, the stock's basically pushing to new all-time highs. So, you get in the old NRZ, what I call my no resistance zone. So, just because the stock's at an all-time high doesn't mean it's going to go higher, because many times stocks would get there and you have a crash effect like Zillow not too long ago. But this is one where, valuation can support it, the analysts can support it, and if they deliver on earnings, again, I think we have a stock that breaks above 81, 82, and basically goes up 10 to 20 points.
Okay.
By the way, Facebook could go up quite a bit more. The other thing I've talked about long term, I always try to balance trades and long term investment profile, right? So the other thing I've talked about, and I do have a long term bull case for Facebook. But when the stock was 22 to 25, I really had one. But Facebook could be a much, much bigger company in 3 or 5 or 10 years. What you're seeing around the edges is that Facebook and Twitter are starting to show disruption against Google, and they're starting to take some market share. Again, not huge, but around the edges, they're starting to grab some internet ad share away from Google. So if over time Facebook can grab a lot of that, they can justify a higher market cap company. But it's already a 200 billion market cap. That's pretty big. And it's not a cheap stock. It was an extremely cheap stock when I loved it, again, at sort of their nadir levels. But, it's one of the more expensive stocks out there on a couple different metrics. But, they basically deserve it because they reaccelerated their growth rate from, 35 to 40% about 12, 18 months ago. And the last 2 quarters, the revenue growth rate has been 65 to 70%. So a big company that's accelerating their growth rate generally has a rising multiple.
So let's talk about Google. And it seems it seems like since they did that split between Goog and Google, it just seems like the stock is left a spotlight. It's not $1,000 stock. Why are you laughing, Sean?
Well, yeah, it's kind of funny. Keep going. Keep going with your thought.
No, and it's just, they're doing Google Glass, they're doing Google Cars, they're doing, Google this and Google that, and it just seems like, it was almost an intentional thing to split the stock in two to kind of obscure everything that's going on. No one talks about Google or Google, it seems, and it's still a major component of the S&P. It's been, I don't even know what. I used to look at the options on these things, but now 560 to 600 has been the trading range. Do you favor one or the other, or what do you think about this issue? It just seems it's like it's not around anymore.
No, well, okay. So first of all, between the 2 shares, I would favor Google L because there's not much of a price difference, and the Google L is the primary share, right? So, but as far as what I think actually Google made. So back up a sec. So Google is still an extremely powerful company. They may in fact be the most powerful company in the world. I wrote a few years ago that I thought they were the most powerful company in the world. And that pretty much the whole year of 2012 through early 2013, I had gone kind of bearish on Apple. I never went outright bearish on Apple. I never shorted Apple. I always believed Apple would have a comeback. It's sort of been my favorite large cap name for most of the time. But Google was always sort of my number 2 favorite, and then it flipped to my number 1 favorite for about 18 months. It's still a very dangerous, very powerful, very disruptive company. But, they may have reached the point where they're just trying to do too many things. And some of the spending that they're doing is where years ago, a lot of the spending that they were doing, we saw the incremental benefit, right? So YouTube really started kicking off. A lot of they basically dominated the world email accounts, internet email. A lot of their other, Android. I remember people panning Android. It was a $200-300 million acquisition, if memory serves. I thought this was a brilliant deal. Look what Android did. It basically became sort of the Wintel for the mobile space, right? So but they've gone into so many different things, and they may have kind of reached a point where just some of their investments are not seeing the payoff that we were expecting of them. The other thing, I think Apple did a brilliant thing when they split not 2 for 1 or 3 for 1, but 7 for 1. I actually think Google probably needs to split their stock again to create some interest in it. I think that the 2 for 1, or what was it? Yeah, 2 for 1, and then this weird split, this voting split share. I don't know if that was, in hindsight, a great thing. But we'll see what happens. I mean, here's the biggest thing I think that's happened. I think Facebook reaccelerated their growth rate. And especially when the stock was cheap, was a far better. Again, I greatly favored Facebook over Google, especially when Facebook was under 35. And I think so. Facebook accelerated. Facebook's dominance is growing, and then Twitter came onto the scene. I actually think Twitter could be the most exciting tech company for the next 5 years. So between Twitter and Facebook, I think they kind of stole some of Google's thunder. And then you're also seeing a very, very resurgent. I mean, how dumb do all the Apple naysayers look now, right? Apple's innovation was dead. Wrong. Apple can't grow again. Wrong. iOS is a dying platform versus Android. Wrong. I mean, we could have a half an hour show on how stupid people have been on Apple, right? Especially when the stock gave you the 20, 30, 40% discount to get back in the name. So the bottom line, a resurgent Apple, a very exciting Twitter, and a powerful Facebook, it doesn't exactly make for the best combination for Google. So I think it's sort of Google's sort of losing the race for the competition investment dollar right now to those other names.
Okay, and so let's talk about Apple. You have your bullish thesis. When it got up to these levels in 2012, it didn't hang there very long, and quite a different scenario now. A much different scenario where it has reached a new all-time high, and going basis, the stock split price, it's holding in there. The high was made at 103, I believe, and change 103.74. Been kind of dicing up and down below 100 here. Are you looking for this thing just to stabilize to 100, over 100, and just launch again up to the 120 area?
Yeah. In fact, so my longer-term price targets on it, let's call it 145 to 155, probably closer to 155. Again, that's a 1 to a 2 year view, and they get there through earnings and cash generation and all that kind of stuff. I think near term, I've been a little bit wrong. I've been very right on the stock, and the explosive potential over the last few months, last couple of years. But I think I actually thought, to be honest, I thought the stock would already be kind of between 108 and 115 by now. So it's one of these things, the market's kind of gone in this digestive phase. The only way to keep the NASDAQ down and to kind of try to foment the NASDAQ correction is to keep Apple down, right? So if Apple's such a big part of the NASDAQ 100 and a big part of the NASDAQ, if you can't keep it down, you can't get the NASDAQ to correct. So I think part of what's happening is you've got just general market sort of malaise, the potential mini correction kind of right in our face, or a rolling correction is probably a better term. So Apple's digesting, but I think the next, I'm not so sure the next quarter is going to be great. I think it's going to be very good. It's going to be a fine quarter, but the 2 quarters after that set up to be spectacular. I mean, this thing could be a pretty exciting stock, even as big as the market cap is. It deserves more. I mean, this is still a very cheap stock, and I've laid out my thesis on this, so I won't beat the dead horse. But you have a stock that's still trading at a discount to the S&P 500. It's one of the premium growth companies in the world, if not the best one. So it's just stupid it's not trading at a premium to market instead of a discount. Still got this unbelievable cash balance. It definitely is showing that innovation is here to stay. I think Apple Pay is going to be huge. And the 2 large screen iPhones are still the best catalyst for the stock that I think people are overlooking, because the normal upgrade cycle for iPhone is about 2 quarters. They bring out a product, they have 2 quarters of really good sales, and then they have 2 quarters of so-so sales because people are waiting for the next device. Well, guess what? Large screen iPhones are here. You're going to see a huge market share shift back to Apple, and I think the upgrade cycle now probably looks more like a 4 to a 6 quarter upgrade cycle instead of a 2 quarter upgrade cycle. So there you go. So as long as you don't feel like the market's going to crash, Apple looks really good. I mean, that's really the only danger here of Apple. at least for the next 2 to 4 quarters, is, market risk. Could something come out of the blue that we don't see that causes a really, really nasty market correction, and it's going to pull everything down? On its own merits, again, it's the most ludicrous thing that Apple still trades at a discount to the S&P 500. But the Apple's full of ludicrous things. I mean, Bengate was maybe one of the stupidest things I've ever seen in my life, that people actually sold stock on that. And there's been a bunch of them. The whole fear that Apple's not going to, when is the China iPhone going to launch? Come on, that was only going to be weeks away. The iPhone's going to sell in China. Again, we could go on and on and on, but the bottom line, the setup's really good. Fundamentals and technicals line up on Apple.
And you alluded to there in your last statement about the general market, and how much is that a part of your overall thesis? I mean, you mentioned as long as the market doesn't crack. So obviously, you're gauging the internals of the market. To me, we're at an interesting point from a technical standpoint, as we've been in several months in the market. We put that triple bottom in the S&Ps. Made another shot at it this morning, but once again, the buyers came in. Do things change? Will you change your thesis drastically on these stocks if we get, let's say we get a move down to 1900 in the S&Ps? Will you?
No, actually, that would make me the market. So I mean, I've kind of been wanting. I've probably raised a little too much cash at a few different times this year. We never seem to get the much beyond a 4.5% to a 5% correction. It's very strange. So let's just talk about that. So every time we get to where the market's down 3.5% to 5%, the internals that you talk about. So whether you want to talk about the NIMO, NAMO, McClellan oscillator, the things I like are what are the percent of stocks above the 50-day, 100-day, 200-day moving averages, right? So what's weird is every time we have a 4 or 5 or 6% correction, or 4 to 5, the market the internals look like we've had a 10 to an 8% correction, or even a 12% correction. I've seen some super low readings on what I call the NAA. So if people don't know, this is the NAA 50, 150, and 200R. You can get all these on stock charts. But even right now, the NAA 50R, which is the percent of stocks above the 50-day moving average on the NASDAQ, this is all the stocks in the NASDAQ, is at 29.29. That means only 29.29% of all stocks in the NASDAQ are above the 50-day moving average. That basically is sort of a correction reading. By the way, the NAA 200R is only at 36%. So only 36% of the stocks are above the 200-day moving average. And again, that usually when you see readings like this, we've had an 8 to a 12% correction. So that this is, by the way, this is part of what things look like in sort of 97, 98. A lot of internals would get very, very weak on very shallow corrections, right? So it didn't take as big of a correction to kind of create the rebound effect, right? That upside lift effect. And you can look at the McClellan oscillator. That's not really one of my favorite, but it basically tells you the same thing. So there's a lot of stuff out there. It's been a very strange year how weak a lot of these internals get, even on fairly shallow corrections. And again, we're also seeing rising volatility in a flat to rising market. That's sort of one of the things I look at, too, that could foment further upside, because, again, that's exactly what we saw in sort of 94, 95. We also saw that again in 97, 98. But on a day-to-day basis, what the market is doing is affecting, I'd say, 35 to 50% of my directional call, right? On a longer-term basis, something's got to be pretty radically bad for me to get off my fundamentals, my hard fundamentals on stocks. I mean, look what happened in Apple, even as bad as 08 and 09 was. Apple was producing growth rates of 55 to 70% during some of those worst quarters, right? So the growth bared out in the end. The key is you couldn't have been too over-levered or you would have been wiped, right? So if you position size correctly, even if you stayed long through part of 08 and 09, you did just fine. You just didn't want to be overly long, and you had to have buying power, right? You have a lot of buying power and a lot of cash reserves to be able to take advantage of the low prices. frankly, I didn't do that well. My problem is I see the market down 30%. And I say, oh, this is it.
Right.
And
right.
I put some buy orders in, and we'd go down. I basically be selling stuff 3 days later.
One
right?
quick
Or 3
question
hours
for
later.
you, Rod. We got to wrap this up here. But Herd
Sure.
Capital's asking if the U.S. dollar is now in a confirmed secular bull market, what areas of the tech sector benefit from a strong U.S. dollar?
Well, that's a funny thing. I mean, generally, U.S. dollar strength is sort of U.S. company weakness to a point. So you don't. This is tough to answer in 30 seconds.
Okay.
You have to kind of go back and look at history. There have been times U.S. market has done very, very well during U.S. dollar strength phases, right? And there's flow of funds issues, and it's a much more complex issue. But in general, what you see that gets hurt us initially is large cap U.S. Right, so that's a minor headwind that Apple's sort of facing and Google are sort of facing right now. I've been sort of thinking about that, but generally the companies with the most overseas exposure sort of take a little bit of a short-term hit, and then people kind of get used to the dollar strength impact, right? But small cap, so companies that are not doing a ton of business overseas. So you know how everybody's talking about this hatred of small cap and how weak small cap's been? Wouldn't it be interesting? Wouldn't it be ironic if U.S. dollar strength, if the next part of of sort of the bull market was led by small caps and small cap tech? By the way, small cap tech has been horrible this year. In fact, it's probably been horrible for about almost a year and a half. So that could be the next area to really heat up, because if they start picking on the large cap U.S. techs, and the small cap starts, is still showing good internals and good growth numbers and stuff like that, you could see money flow back into the small caps.
Okay. All right, Sean, we got to let you go. Thanks for coming on.
You bet.
We'll pick this up next time. Thanks again, Sean.
Always good to be
Udall.
on. Appreciate having me.